Welcome to CAMRADATA's Investor Conference 2015 and welcome to the worshipful company of Armourers and Braziers.
It's the first time we've hosted a conference of this nature. Historically, we've always just had, say, segments of the institutional industry involved. So today it involved insurance companies, pension funds and investment consultants.
I think it's an absolutely fantastic venue. I hope you've had the opportunity to have a look around.
What a difficult year we had in emerging market debt. So, local currency, double-digit negative returns, currency depreciation, yield increase. Hard currency, we had to cope with the hesitations of the Federal Reserve.
Let's try to take a step back and look a little bit like trying to have a broader view of emerging market.
There was a lot of talk about the low carbon fund section that was done by Amundi, people saying that it's now becoming more of an issue for sort of pension funds, trustees are starting to talk about it.
Today I will make a brief introduction to our low carbon equity strategies. So first, what are we talking about? We are really talking about index type of strategies that seek to replicate very closely the performance of broad market indices such as the MSCI World or the MSCI Europe, while at the same time significantly reducing the carbon footprint, that is to say the number of tons of CO2 emitted per unit of market capitalization.
Because I work for a local authority, some of the members have been questioning the position of the fund. We can actually go back to our fund managers and kind of start asking them, some questions about the carbon footprint in the portfolio, in the fund that they are managing.
We've got the multi-sector investment fixed income panel discussion. It's going to be chaired by Nimisha Srivastava. Nimisha is Senior Investment Consultant at Towers Watson.
Very nice to be here. I think most of you who came to the last event might be familiar with Towers and how we approach multi-sector fixed income. I thought I would set the stage for a few minutes and just share how Towers views the asset class, which is a little bit different, and then go through each one of these panelists' approach to it and pros and cons.
We came down with the approach that we liked emerging markets, high yield, and senior loans. How we were going to allocate that was the question.
My name is Chris Bowie. Good morning. I'm one of the partners and portfolio managers at 24. I run one of our multi-asset credit funds, as well as a pure play credit corporate bond fund, so I'm in both camps as well. One of the things that's different about 24 is we only do fixed income. We're a boutique. We have just over 5 billion under management. We firmly believe liquidity is an underappreciated risk in fixed income right now.
I'm Jean-Luc Hiver, CIO for fixed income at La Française in Paris. We manage 20 billion euro in fixed income, and we launched in 2011 this multi-sector fixed income approach.
In a world of big databases, quant managers, what is the role of a fundamental bottom-up stock picker like me?
We believe there are three possible sources of alpha in this world. One is informational, which means you are able to get better information than the market. The second is analytical, which suggests that all else being equal, if everybody has the same information, you have a better way of processing it, analyzing it, and understanding it. A third is behavioral.
I think everybody's on a slightly different journey as to whether they are, how far they've got on their de-risking and they're just now have reached to where they want to be and are just now trying to find yield without increasing the risk, and that will be appropriate for some. Others are on a different stage of the journey and are still going through a de-risking process, and everyone needs to start thinking outside pure bonds, particularly if we're going to be into an increasing interest rate scenario. One needs to make sure that your bond portfolio is working as efficiently as you possibly can. If you go to the ONS statistics, where you'll find mortality rates for the population at large, you will also find an expectancy table which not many people are aware of, and it's called healthy life expectancy. And it's pretty critical. In fact, for most people, it's more important than actual mortality. I believe that everyone needs a lifestyling process for their health with an appropriate flight path, because there's an awful lot that you can do to defer that point of ill health.